Well, the tax system seems to change on a daily basis as I record this on the 17th of October 2022. Many well-intentioned tax changes to the UK income tax system over the years has created kind of crazy high marginal tax rates for people earning between £50,000 and £60,000 and £100,000 to £125,000. These marginal tax rates can be up to a whopping 90%. An article or a website that I've been recently reading by the Tax Policy Associates shows how this bizarre and unfair situation comes about. So I want to share with you how this may impact yourself and thousands of UK taxpayers. The first thing to explain is what I mean by the marginal tax rate, and it's different from your effective tax rate. For your effective tax rate, you simply take the total tax you pay and divide it by your gross wages to get a percentage. The marginal rate of tax is different and more subtle. It's the percentage of tax you'll pay on the next pound that you earn. So it's irrelevant to where you are now, but highly relevant to your future because it affects your incentive to work more hours or earn more money. The marginal rate of tax in the UK for high earners, in theory, caps out at 47%. So that's made up of 45% income tax and 2% national insurance once you get over £150,000 worth of income in a year. But the reality is that many people earning much less than £150,000 can have a much higher marginal rate of tax. There are two main reasons for this. Firstly, the impact of child benefit. Child benefit is £1,133 per year for the first child, for your first child, and £751 for the rest. It starts to be phased out by a special tax called the High Income Child Benefit Charge. If your salary of one of you or a couple hits £50,000 a year or more, and therefore you get no child benefit at all once your gross salary of the highest earner in the household hits £60,000. The other rule that impacts your marginal rate of, or your marginal tax rate is the personal allowance. And this is the amount that we earn before income tax kicks in. Currently, that's £12,570 in the 2022-23 tax year. The personal allowance starts to be phased out if your annual salary hits £100,000 and is gone completely once you exceed £125,000. These phased withdrawals create very high marginal rates of income tax. So what I'm hoping to do in this video is explore the impact on marginal tax rates for a family with 3 children, as an example, and how this changes as their income changes. So you'll see from this chart from the Tax Policy Associates that your income that goes from zero income up to £180,000, and it's initially based upon a single earner for simplicity with a number of assumptions built in. So it's just a model for illustrative purposes, but based upon real numbers and real tax rules. You'll see there is no income tax to pay on a salary of up to the personal allowance. And then the marginal tax rate jumps up to reflect national insurance and the basic rate of income tax currently paid. That bump between £50,000 and £60,000 is a 68% marginal tax rate, meaning that for every additional £1,000 you earn over the £50,000, you take home £320. So in this video, I'm going to explore the impact on marginal tax rates for a family with 3 children, just as an example, and see what happens as their income changes. You'll see from the chart from Tax Policy Associates that the income goes from zero income to £180,000 based upon a single earner for simplicity with a number of assumptions built in. So it's just a model for illustration purposes, but it is based upon real numbers and real tax rules. So you'll see there's no income tax to pay on a salary of up to the personal allowance. And then the marginal tax rate jumps to reflect national insurance and the basic rate of income tax currently being paid. Now that bump between £50,000 and £60,000 is a 68% marginal tax rate, meaning that for every additional £1,000 you earn gross, you take home just £320. So looking at it another way, imagine you're working a reasonably modest 1,500 hours a year and earning £50,000 gross salary. So about £38,000 take home. So that's £33 an hour before tax or £25 an hour after tax. So my question for you is, how would you like to work another 200 hours a year for the same pay? Sounds good. But after tax, you're going to be earning £10 an hour because of the hike in your marginal rate of tax. Now, you may not think that's worth your while. And if you need childcare, the additional childcare could easily cost you more than your additional pay. The bump between £100,000 and £125,000 is the withdrawal of the personal allowance. And remember that you start to lose your personal allowance when your earnings get over £100,000 a year. So this results in a 62% marginal rate of tax between the £100,000 and the £125,000. It's not quite as dramatic as the 68% paid by earners in the £50,000 to £60,000 bracket, but still well over what you probably believe that you're paying. And that rate lasts for a significant £25,000. I mentioned earlier that the marginal rate of tax can be as high as 90%. So let's see why that is. Because it's linked to child benefits. Those high marginal rates just get bigger the more children you have. This chart looks at the situation for someone with 6 children. Someone with 6 children earning between £50,000 and £60,000 will have a marginal tax rate of 91%. Why stop there? With 8 children, you get a top marginal rate of 106%. So if you earn £50,000 gross, your after-tax pay is £38,000. If you earn £60,000 gross, your after-tax pay is £37,000. That's insane. Hopefully nobody's actually in that position, but a sensible tax system doesn't create such results, even in theory. It's complicated and unfair for people hitting those thresholds. The way the child benefit withdrawal applies means that it catches lots of people out, and for those who are unaware of the impact, those high marginal rates can act as a real disincentive to work. These case studies illustrate the importance of seeking advice. If your income is between £50,000 and £60,000 or £100,000 and £125,000, as there are steps you may be able to take to reduce your tax. Thanks so much for watching. I hope you've enjoyed this video. If you have, please press the like button now. I'm Justin King. I'm a chartered and certified financial planner, and my aim is to help you live a successful life. That often involves understanding your money. I host a podcast called the Retirement Cafe Podcast. You might like to check that out. I'll put a link in the description below. And of course, you can sign up for my weekly newsletter, which is packed with inspiration and tips for a successful retirement. For now, I'm Justin King, helping you live your best life.